January 31st, 2020, COVID-19 was detected in the UK. November 27, 2021, Omicron is found in the UK. In this wild roller coaster ride, how has the UK property market responded and how are things looking in 2022? If you're looking to invest or move to the UK, the answer will be important to you. Hit subscribe to make sure you keep up with our upcoming videos on the UK. Let's start with the year of real estate resilience, 2020. Despite the excruciating circumstances, the property market performed extraordinarily well. Why? There are two reasons for this. Number one, the unlocked demand for property after the UK's first lockdown in March 2020. Number two, the stamp duty holiday that began in July 2020 and lasted for a whole year. Overall, UK property prices in 2020 surged by 8.5% and work from home became the staple. Despite starting off with a lockdown, 2021 carried the housing boom torch even farther, coasting on the stamp duty cuts from the previous year and the historically low interest rates. It has been the biggest year in UK property since 2008's financial crisis. As the economy came back to life and vaccine programs began to be implemented, demand stayed strong as the market continued to grow. Here are the details. UK property prices in 2021 rose by 10.2%, displaying the highest growth rate in the last 15 years. 1.5 million house purchases have taken place since January, 47% more than 2020. Home buyers borrowed around £316 billion worth of mortgages, 30% up from 2020. At the moment, uncertainty is high due to Omicron and unprecedented price levels. But whether you're looking for a new home or considering a new investment, think of the following to guide your purchases in 2022. Number one, low housing supply. It's important to remember that while demand has been surging, property supply has not kept up, which partially accounts for these historic figures. For example, annual housing supply in England from 2020 to 2021 was the lowest in 5 years, dropping 11% compared to 2019 to 2020. This can be largely attributed to the slowdown from pandemic lockdowns. Number two, change in interest rates. While the economy is still relatively fragile, the Bank of England raised the interest rate from 0.1% to 0.25% in December 2021 to fight off rising inflation that could threaten households that are already struggling with the cost of living. Another possible interest rate hike might be on the cards for 2022, which would only make it more expensive to borrow money. Number three, rising unaffordability. The benchmark for mortgage affordability is that the amount borrowed, which is the property price minus the 10% down payment, should not exceed 4.5 times a buyer's wage. Unfortunately, unaffordability has been rising since 2015. Single first-time buyers in their 30s cannot meet this target in 95% of English localities and 86% of Welsh localities. Understandably, rising petrol and electricity prices have tightened many budgets. In face of high uncertainty, most experts across the industry expect a closer to normal housing market and housing prices to cool, but to keep rising by 5% at the national level. Prices could drop if Omicron leads to lockdowns or interest rates rise further. Prices could continue increasing if housing supply continues to stagnate or demand and desire to prioritize work-from-home lifestyles stay strong. Both home buyers and investors should make sure they stay on top of pandemic developments, news from the Bank of England, and government measures relating to mortgages. For more updates and property information, sign up to our newsletter and follow our social media pages. You can also leave a comment below if you have any thoughts about this issue.